The vault door swings open in Bamako. Inside, crates of gold bars, shiny, heavy, untold millions worth, are being loaded onto trucks. A covert signal is sent, commence transfer. But this shipment isn't headed to London or Dubai. It's bound for Chennai. By dawn, the U.S. ambassador in Mali receives an urgent cable. Stop this gold for rupee. Operation immediately or face consequences. Behind that bold message lies a secret pact between Mali and India. Mali will sell gold directly in Indian rupees, bypassing the dollar system. Washington is furious and plotting how to reverse it. In the next 20 minutes, we'll dig into how this radical deal came to be, who's behind it, and whether Washington can stop it or if Mali has just lit a fuse that might reshape Africa's financial order. First, let's rewind to see why India would even want direct access to African gold. India's national obsession with gold is no secret. It underpins weddings, savings, and cultural rituals. But recently, its interest has deepened into strategic territory. Gold isn't just jewelry, it's a hedge, a reserve asset, a means of bypassing fragile dollar dependencies. Historically, India imports gold through intermediaries, priced in dollars, and stored abroad or repatriated in bullion form. But what if India could secure its own sources directly from mining nations? No middlemen, no dollar conversion costs, no reliance on Western financial systems? Over the past few years, whispers floated, Indian firms quietly eyeing gold mines in Africa, working deals under the radar. Some reports suggest India is offering long-term financing to mining nations in exchange for gold delivery agreements. This is the speculative link you'll want to research further. For India, a direct gold supply in rupees would serve multiple goals: reducing strain on foreign exchange reserves, diversifying reserves with real assets, and signaling a break from global dollar reliance. But choosing Mali, one of Africa's top gold producers, was a bold move. Next, how did Mali come to the point of striking such an audacious pact? Mali is one of Africa's largest gold producers. Gold exports have long formed a major share of its foreign income, but over recent years, tensions boiled. In 2023, Mali overhauled its mining code. Taxes on gold exports rose, royalty rates jumped, and the government demanded larger stakes in operations. In effect, mining companies would surrender more gains to the state. Some companies balked, others withdrew. By 2025, production in the Lulo-Gunkato complex, a flagship mine run by Barrick, fell sharply. Output dropped nearly 32% year over year, largely because export restrictions, legal blockades, and government seizures choked operations. Mali's government even seized gold stockpiles and detained foreign mining executives amid disputes. The pressure was clear. Mali's rulers intended to reclaim control. Foreign partners were warned, adapt or exit. Western firms, already uneasy, pulled back. That vacuum created opportunity. In stepped India with promises of capital, infrastructure, and a deal that dangled a lifeline. But how did they craft a pact audacious enough to draw U.S. ire? Leaked memos and insider testimonies sketch out terms that read like a covert revolution in trade. Mali will sell predetermined gold allocations exclusively in Indian rupees. No dollar conversion, no intermediaries. India commits to build a refining facility in Bamako, so gold processing remains local, adding jobs, retaining value. India provides long-term infrastructure loans, roads, energy, security tied to the gold deliveries. Mali retains sovereign control, 40% state equity, veto rights on foreign partners, and full oversight over exports. In return, India guarantees minimum floor prices for certain gold quotas even if market gold dips. To Washington, this pact threatens the dollar's dominance in commodity trade. The U.S. sees it as a backdoor undermining global reserve currency orthodoxy. Internal memos label it a direct assault on dollar hegemony. But hold on, that's not all. Some clauses are more clandestine. If Mali reneges or faces pressure, penalties convert into debt demands, ensuring Mali stays tied to India's economy. Next, how has the U.S. already reacted and how far might it go to stop it? Once Washington caught wind of the gold for rupee deal, it went into covert damage control mode. Several fronts were activated: diplomatic warnings and demarches. The U.S. State Department privately warned Mali's leadership, this deal could isolate you internationally. American envoys visited Bamako seeking rollbacks or compromises. Aid suspension and economic leverage. Mali relies on foreign aid, loans, and IMF support. The U.S. quietly pressured multilateral lenders to withhold funds unless Mali rescinds the deal. Legal and trade sanctions. U.S.-based financial entities were warned against facilitating gold transfers. Sanctions lists and entity advisories were prepared. Also, the U.S. explored invoking trade rules to restrict Mali's access to certain markets. Security conditionality in counterterrorism talks. American officials suggested withholding military and intelligence cooperation unless Mali walked back parts of the pact. Washington's message: profits are not guaranteed, but would Mali blink? Stay with me because next, the ripple effects of this deal go much farther than you think. If the pact holds, the fallout is seismic. Consider these magnitudes. Dollar displacement in commodity trade. A major source of raw commodities, like gold, priced in non-dollar currencies, erodes one pillar of the dollar's global dominance. More nations could follow. Reserve strategy redefinition. India's move might inspire other states to rethink how they hold reserves. Less U.S. treasuries, more tangible assets in commodity trade, new alignments. In Africa, African nations seeking alternatives to Western pressure may view the Mali-India Pact as a blueprint. Countries with resources could demand direct deals outside dollar systems. Geopolitical alliances shift. Mali may tilt toward India, Russia, China, or alternative powers, reducing Western influence in West Africa. Resource nationalism accelerates. More African states might renegotiate existing contracts, demand local processing, or halt exports to dollar-dependent buyers. But with all that upside, there's danger too. Let's peek behind the curtain at worst-case breakdowns. Even bold deals carry chaos. Here are potential cracks and how parts of the pact might survive or fail. The U.S. and allies may impose crippling sanctions on Mali's banking, cripple trade corridors, or freeze Mali's foreign assets. In response, Mali's economy could collapse. India might have to step in with rescue loans, deepening dependency. If gold operations face corruption, environmental harm, or community displacement, public anger could rise. The opposition could fan nationalist sentiment, especially if people feel cheated or exploited. If global gold prices crash, Mali's fixed price clauses could become burdensome. The deal's floor price guarantees might hurt India or Mali when markets dive. Survival paths. Diversify partners. Mali hedges by signing parallel deals with China or Middle Eastern buyers. Regional coalition. Mali brings in ECOWAS or African institutions to legitimize and shield the pact. Deep integration. India invests heavily in education, health, industry, and regional development, so rollback becomes politically costly. Debt swap mechanisms. If sanctions strike, Mali and India convert debt obligations into over-time gold transfers, smoothing pressure. Trust that both sides know the stakes are high. The real test of this pact will come in the months ahead. This isn't just a gold deal, it's a question of who gets to write the rules of trade. Mali and India, by daring to price gold in rupees, nudged open a door that could fracture centuries of dollar dominance. Washington's retaliation may be fierce, but the genie may already be out of the bottle. When the dust settles, we'll see whether Mali remains a pawn or becomes a player reshaping global economics from Dakar to Delhi. The bigger question: who's next to make the same move?